Investing and saving for young Canadians can often seem like a daunting task. According to RBC, millennials are more indebted than ever and have the smallest cushion against a potential job loss when compared to other generations. And those trends are also proving true for Gen Z, as they face a tough job market and poor economic prospects when joining the labor force. Joining us now to discuss investment and saving for young Canadians is Brendan Caldwell, Director at Caldwell Securities Limited. Brendan, thank you for joining us today.
Theresa, great to be here. I'm glad we're two young Canadians that both have jobs, so that's a start.
Now, before someone even begins investing, what are ways someone can get themselves financially sound in case of a financial emergency?
I think I would push back and say both go hand in hand. It involves setting a little bit of money aside. And the answer is how much? Just amount you slightly can't afford. So whether it's $50 a month or $100 a month or $250 a month, whatever you just can't afford, just so you notice it, putting aside a little bit of money like that will go a long way to making a young person or any person a lot more resilient to the ups and downs. Even if you have debt, to have something on the side that's in liquid investments makes you a lot more resilient.
Now, you did just kind of touch on how much a person should save, just pushing a little to the side, but how much do you think is a smart idea to save in order to be able to invest?
More than zero. So the implication from the introduction that you gave, which was great, was that young people are having a hard time getting jobs, that they have more debt than any generation in history or something like that. Now, the good news is that whatever inflation numbers are doing right now, inflation will eventually take care of any debt that any person has right now. Eventually, it will get inflated away if it can be looked after. So that's a start. But you need to put some money aside over and above what you owe. It may seem silly, but if you have some money that's not committed, that you can bring to the party, it means that even if you owed, let's say you owed $10,000, and the person to whom, or the bank to whom you own $10,000 is demanding payment. Well, you have even $1,000 set aside, separate from your $10,000. You can go to your creditor and say, look, I don't have the $10,000, but I'll give you $500 this month. I'll give you $500 next month. And, you've now bought yourselves at least 3 months before anybody, and if you don't have money, the next best thing is to go for time. And one thing young people have that, say, someone of my generation doesn't, is time. It is very much on your side if you use it wisely, and putting a little money aside every month, even if you have debt, is one way of doing that.
Now, is there a right time to begin investing, and what are the best things for a young person to be investing in?
Well, I think there's two ways to attack the second part of your question. What's the best way? The easiest way is to use a mutual fund, because you can have that just $50, $100 a month taken out of your account. And I would have it invested in something that can grow. So even if you don't understand investments and just put it in some growth fund, it's going to do better even if the market goes up and down, because of the concept of dollar cost averaging. Because you're going to be buying more when markets are lower and less when they're higher. Even if the market doesn't do anything, if the stocks don't go up and they just bounce around, one will still make money. The other thing a young person can do, where they have an advantage over an old guy like me, is that you guys know stuff that I don't. You know the hottest face pages, TikTok, InstaChat, Snapgrams, whatever it is that people are doing, Roblox. You know about it before the old people do, and you can invest in things that, well, it doesn't have to be a technology product even. It can be clothes, it can be accessories, it can be whatever that that I don't. You can invest in that ahead of the pundits in the investment business. So either make it simple and buy a mutual fund, or buy things that you know more about than the old guys.
Now, we do just have under a minute left, but something that seems super confusing is picking the right mix of investments. What are some tips you might give someone when it comes to divvying up investments?
For a younger person, I think they're all our investment, unless they need the money like next week, next month, or 3 months from now. I think all their investments should be investments that can grow. Stocks, mutual funds that own stocks, exchange traded funds that own stocks, or real estate, even just things that are that benefit when the price of things goes up, because inflation is coming back. And I think having more than most of your money in investments that can grow will serve young people very well in the years to come.
Brendan, thank you so much for joining us today.
Thank you, Theresa.